Hey folks, welcome to Thursday, the 11th of November 2021. So, yesterday we saw a little bit of capitulation on US equities, really triggered by the inflation data coming out of the US. We had the CPIs coming out, and just to bring you back here, we had a core CPI month on month coming out 0.6% above the expectation 0.4, and the CPI year on year 6.2% coming out above the expected 5.8. We also had Elon Musk selling about 5 billion, I think, worth of Tesla stock, which really was only disclosed at close of day, and we only have that now. So, you know, uh, quite a few catalysts there for the downside, but really looking at the inflation numbers, that was the trigger. And coming into, we had that sort of, let's see, the half one reading here at this point, and using the spoos to look at this. Um, you know, we kind of had the half one data coming out just here at this point. The market, taking a bid back up to near high on day, and then when we got that market open, just came off the top and pushed down into, for example, here on the spoos, this nice little area that we've been tracking for some time. This ledge is actually sort of the opening, sort of. Well, actually, it's just kind of this step, really. Actually, sorry, all my face is in the way. I'll just get that there. So you can see the step put in when we pushed up there on Tuesday, the 2nd of November. So I thought really nice area for this market to come back and mark off, and so now we have bounced from that last night, bouncing on the close 7:30 into 9, the 9 o'clock marker for the close. I think we can retrace even further on this market. The market largely shrugging off this inflation reading, and as it has been doing for over a year now. So, certainly shrugging off the threat of the higher inflation. We've had Jerome Powell kind of seeing us through, saying, "Well, it's transitory," and um, there's only how long is transitory. Yeah, I mean, higher prices are coming through. Looked at an article in the Economist, which I could share with you here as well. You're seeing a couple of the key drivers of that inflation really being, energy push here, petrol and used cars really ripping to the upside in terms of the year on year inflation. Car insurance as well, worldwide up 57% over, since 84. So an interesting article here that I'm going to post for the guys and girls in the Discord room. But yeah, coming back to these charts, you can see here anyway, market is holding up quite well. I don't think the sell off yesterday was that really that interesting. From sort of the open, we came down about 1.2%. For me, I think this ledge below is all important. We need to hold this. Obviously, the longs at work on this on the retracement right now, but if things do get heavier coming into the US session, for example, if we can't reclaim the floor here at sort of the 3 a.m. APAC lows put in yesterday, and we start to turn down again, that's going to be pretty bearish for this market. And I think we could easily revisit not only the 45.90s, but back to the 20 EMA 45.26. But for now, retracement is on. If we continue with this upside, it's going to be pretty easy to see that we push much higher to meet this sort of all-time high downward trend here, coming in really around 46.93s. So that's it on the spoos. I'll just make sure that is a thinner line. Don't want to get my apples and oranges mixed up. What we have seen this morning is a resilient DAX for the last week. 5 trading days, and pushing into marking a new all-time high at the R2, just sneaking it in there. So very resilient European market. this morning so far. Why is that? Well, one of the key drivers to that is going to be this much weaker euro that we've seen. So I think that is why we've kind of bounced quite a bit on. Well, not bounced quite a bit, but certainly taken a nice bid in the DAX this morning. On the weeklies here on the euro. 14,695. It's a big one. It's a big one. It's the high of the week of the 21st of October 2019, the high of the week of the 30th of December 2019. So marking in a struggle on the end of the year there. And as we tested in 2020, this really did prove quite the line in the sand. The market just could not close above for, probably about a month and a half there. So now we're testing that, as you can see, top left of your screen, 14,695s, and it's not really holding up that well. Of course, people flight into the dollar, you could say, on the back of this higher inflation reading. The Dixie on the weeklies here, as you can see, there is very little resistance, if none at all, until we get to the 95 73 53, 95 spot 7353 here. And so that's about 0.7 0.6% up from where we trade right now. I think it's going to happen, and I just think you need to be ready for that much lower euro. Of course, if you are an FX trader, you see in the euro are the SPUs pushing up here now. Of course, if you are an FX trader, this is key information for your FX pairs, your dollarized FX pairs, and really, a huge signal to really angle for the longs there on those markets. So do be careful about trying to sort of buy into any of those dollarized pairs at this time, given this much stronger dollar. Moving over on the Nasdaq, you can see that the Nasdaq has had a pretty decent bump back up already this morning. Of course, we had that sort of tech sell off there on Tuesday's open, coming down. Tesla really driving that market down. Tesla weakness. Now we're just really holding up in the 16,000s bid this morning, looking for higher prices. R1 seems like it is set to trade. We have had a breakdown on this general pennant structure here. Top and bottom. I think a retracement back up here should be the target for these morning buyers on Nasdaq. Should we breach the 16,000, it's really just inevitable that we trade to the 15,701s on the downside, and below there you're looking at the bigger trailing moving averages, exponential moving averages, the 100 and the 50. I think that 100 is out, but let's really just disregard that for now. So your big line in the sand around here, the 16,000, this little step below as well, all important for the bulls to hold this area for the week really, and look for higher prices. It really, today will be the telling day to see what the market wants to do with this inflation data. Does it want to price in further downside? I think waiting is always the key. The Dow finding support really on this ledge high here from around 4:30, 2nd of November. I like this level, and you see it's we've come back in here, picking up a little compression. And I think largely this is going to also retrace up here. Nice little entries here on the longs, 8 a.m. up we go. So yeah, that's it for the equities picture. I am open to further upside or further downside at this time. Gun to my head, I would probably be shorting these things from yesterday's high of day, or probably this 36,360 on the Dow. I don't have any view on the SPUs right now, and the Nasdaq, I think, higher prices than the R1. Oil yesterday really getting absolutely hammered. This area here was a great long for me. I really was comfortable in this position. Working something off here and then taking a stop out on the pullback here was just really, really frustrating, given I think there was a lot. We had the DOE come in at a smaller build, I think, than build a smaller build than forecast. So really the dollar strength just absolutely crippled oil yesterday, and yeah, sure, it's taken a little bit of retracement now this morning, but generally I think oil cannot survive above like $83 with this dollar now surging. So I think it may be high time for us to come down and retest the 79.81s, and then actually look for a higher quality long into higher prices. I still hold firm that we'll trade 88s. But this stronger dollar is just killing it, absolutely killing it. Gold as well. We cannot go anywhere now without talking about gold. Of course, really amazing push yesterday on the data. If I go down to like a 15-minute chart here, you can see just on that data, lovely little pullback to the compression. The flag or the pennant top, picking up the buyers, and then boom, up we go. So I did get involved here about midway through the push and held that up into the 1870s, then looked for the reversal. The reversal was, it all looks great in hindsight, but I just didn't feel like giving back my earnings and kind of getting too smart with this. And the reversal, yeah, was clean and clear, but I just took a little nibble and then left it alone for the day. And so really good rebounds as well. Rebid off the 1850 spot 8, 1870s. I think while we are going up in the dollar, I think oil or gold is going to find it very hard to keep pushing above the 1870s. But I do think it will happen. So go out onto the bigger time horizon on gold. We can see here on the weekly bars that target 1870s is the high of the week of the 6th of July. Lovely line in the sand here. Lovely line in the sand for this market. So, a couple of areas there. Target achieved. I think the gold trade you really want to be on is probably cleaner pullback into the 1850s, and then playing for the play out above 1870s, and I think that's going to be a fast run to the 1924 spot ones, which is actually R3 today. So it's a big old trade, big trade. Anyway, that's it for me for today's session. I will be off the desk, heading to the States for some meetings next week on Thursday and for Thanksgiving with some family over there. So I'll be back on the desk on the 29th, but I'll be with you all the way up until the 18th. So yeah, have a good session. Later.